We are alive, ladies and gentlemen. Thank you for joining us today. Wow, we dropped faster than I thought in some of the assets, which is a good thing. I mean, I guess it feels nice to forecast the drop and to maintain conviction of okay, we're seeing profit taking. These are big players, so profit taking is going to be noticeable. We haven't seen any real downside. I think the long-term pivot of the S&P 500 is probably the most noticeable, because as soon as it could not regain its trend, the entire crypto sector dropped. So regardless of if there was any bombs or gunfire going on today, the charts were giving us a pretty ample evidence that this was going to take place. So I think that's something to keep in mind, is that during this process, you get to witness how the market sets you up for what a spring is. Because before the pandemic in early 2020, you could tell that something was going to happen in the charts. Now, you don't know what the spring is. You don't always know that SBF and FTX are the scammers, or that there's a war, whatever it might be that causes either the bottom of the market or drops within the market, usually get foretold as some black swan in the future. But the market actually gives indicators, some type of like precognizant understanding of things that are taking place. The market is generally aware of that. So some bad CPI data followed by just a general rollover in the markets. Oh, we got a screen share stuck here. So we're going to fix that really quick. Okay, so there's Bitcoin. Now that chart should work. Should let us know that everything's going live on YouTube. And everything appears to be going smoothly still. Okay. Oh. Okay, so sorry, I just wanted to make sure the stream was working. It seems we're dropping a few frames, so I'm not sure the internet is jumping pretty heavily. So hopefully things are coming through smoothly. If you can, let me know. Yeah, I think it says viewers will experience buffering. Dang. Well, doesn't tell me the exact data. Let me know, you guys, how the data is coming through. I can actually kind of watch. Oh yeah, it's pretty low quality. Well, I'm not dropping too many frames, it says. So maybe I'm just gonna roll with it. Okay, so I always find this kind of interesting, is that once you get up near the top or towards distribution, a lot of traditional traders who look at like pennants and bull flags start to get a little bit confused. And I wanted to point this out because I remember it was very difficult when I first started trying to pay attention to the markets as well. So the last week or two, I've been talking about how this was looking and feeling like distribution, and there's a few reasons why. And it wasn't just because Bitcoin was turning over, but it's because multiple assets were all turning over. So we were looking at Ethereum, at least as a weaker reaccumulation range. We were looking at Avalanche, which had already broken below itself. I mean, we've got now another negative across the board, negative 20%, basically across the board. So Bitcoin's still one of the more stable places at only negative 7%. Many of these other positions have just gotten totally trashed and have returned and are on the way to returning to the beginning of the market cycle. So for instance, many of the things that we are interested in have a great discount, 60%, but also up 150%. So just for time understanding how, like, from January, you got 54 days of upcycle for 220%, and then followed very quickly afterwards by negative 60% of that upcycle in 27 days. So up and down happened very quickly within the market cycle. Again, we went lower than I thought we were going to quicker. So again, I pointed out that the market looked like it was starting to turn over for multiple reasons. But this drop down has been massive. But there are some positive indicators for a bounce coming. So whenever you fall this hard, there's usually a lot of volatility again back to the upside. So we could see big jumps and everything, but this is a big change of character for Bitcoin to begin with. So a lot of people start to think that your accumulation ranges, or not a lot, I guess there's very few of us, most of them are trade pennants, but they end up trying to trade something like this. I'll kind of draw it out. They'll have drawn a pennant here and they'll be like, oh, it's an ascending triangle, it's bullish, and if it didn't go up, it was going to go down. If it didn't go down, it was going to go up, kind of mentality, which is kind of how trading can appear to the layman. But one of the positive things about these reaccumulation channels, so for instance, what we've been studying the last few months, is they give you pretty clear indications of upside starting and then how it finishes. So we had our SOS for Ethereum, right? This bull market cycle is not done. We had our SOS for Bitcoin. The bull market cycle is not done, but it could come lower than we think. So I want to make that clear. We've dropped harder and faster in some of the other assets than I would have thought. There was a story about someone losing $1 million on a 3x Pepe long that they had running, and my friend and I were laughing at how ridiculous it is that he would be making a tweet checking the market and macro data and CPI is good, so my 3x Pepe long is safe. It's just it's ridiculous. Those things do not connect. Okay. So science does this often to the layman as well. Science will often give the impression that a person thinks they know what they're talking about. So for instance, here's something many people sounded like they thought they knew what they were talking about, was 97% of the scientists would agree. Well, okay, maybe, but we also know that 97% of those scientists are easily bought out by money if their careers depend on things. So there's no axiom. What you need to do is look for the trend shift. The trend shift also happens in data as well. What does the data look like after there's a bunch of money involved? Oh, look, climate change is everywhere. If we can get more funding to do X, Y, or Z, then climate change is a real big problem. So we've seen multiple times that data itself is very fungible, we'll say, which is not what you'd like. You'd like to be a fact, and that should be replicatable. So here, again, what's unique is that if you're looking at these small kind of pennant patterns, they're always going to break to the upside and then sometimes break to the downside. I'm pretty sure there were people posting one that went like this. So when it broke to the upside here, they're like, yeah, gig along to 86,000. I saw so many posts of, you're not bullish enough. Here's this this bull market compared to the last bull market. So many of these, I guess, repeat memes give us that data of the trend shifting of, okay, we're not in fear mode anymore. We're not where we were at the bottom of the bull market. This is what greed looks like. And it's not always it's not first noticeable in the charts. It's okay. Are people buying really nice watches? Are they buying new vehicles or homes? These are the first subtleties of that market, and those are shifting. It's not always like, I think, Grant Cardone sells a house for Bitcoin. That's the same thing. That's the same thing as a market top. Just because he's selling versus him buying, it's the same function of a peer-to-peer marketplace. So it's worth keeping in mind is that when we're following the charts here as well, we're also trying to follow that emotional trend, because it gives us data just by looking at things like Twitter. We don't necessarily need to even be looking at the markets. You can kind of tell what's going on. But anyways, deep drops here. Dang, we could come back all the way down to $2,500 for Ethereum. Yeah, we broke some almost all the structures. All the structures turn into distribution here. And this is what I was saying about phase C and D, where you can go from what's reaccumulation into distribution real fast. So we're about to find out what that looks like. But let's not call a bottom. The first area and target for Bitcoin was around 52 grand. Although I think we're going to get a bounce before that. I think we're going to get another bounce. I don't think we've seen the spring yet. And for those of you that will know why, you'll probably already see this on the screen. But remember, in the beginning of any early trading range, you have what's called a shakeout. It's this large supply check here, followed by the automatic rally to the top of the range. This upthrust and followed by distribution is very bearish, at least in the short term, which means, again, we could go lower than 52,000. Damn, we could come as low as 44,000 for Bitcoin. And maybe actually get that 0.7. We were kind of, we estimated we wouldn't see, which is this kind of breakout. Let's actually go back to the 2-day so you can see what this would look like. Yeah. Yeah, I don't think, probably very unlikely we go back down as low as 40,000, but 50,000 seems very likely. This is still a test of the top of this widening megaphone we are following throughout the trading ranges too. So, and this is where the majority of the supply test came through the previous time. So this kind of makes the most sense. And then again, like I said, my thesis is that we get this kind of long drawn out accumulation channel that does something like this, maybe scares people, wicks down to 49,000, and then continues higher for the final kind of blowout top, which is probably shorter than most people think. But let's be nice, and let's say Bitcoin goes to 150, 180,000, because it's always performed well, and then comes back down, and then shoots up maybe one more time, and then does an automatic rally, and then comes back down and forms like a bottom maybe around $100,000, I think, into 2025 and 2026. So I think that's going to be, I bet you'll be pretty damn close to right on that one. So keep that in mind. The only thing that's changed here is we thought we would see a reaccumulation range below the top of the box for Bitcoin between that $36,000 and $50,000 range. Here it's happening maybe above the box. So this would be even a bit more bullish, which is why I gave that like 160, 180 sketch target. But I bet that's going to be pretty close. Maybe I'll put some more time into writing that thesis down and why. But if you are also not new to this channel, you're going to remember that war is very bullish. It's just about the proximate origins and timing of the war. Jeez, wording is good. So I don't even know why people are connecting the Iran stuff and the crypto market down cycle. They're not connected at all. They're just in relation to each other. It's not the cause. It's clearly not the cause. There's very few people over there. It's not the start of like an endless war, because we're already in that war, and most of it's biological and psychological at this moment. So not the bombs and gun stuff is just for TV drama, really. I think if you were really focused on the guns and bomb war aspect, you're just being sold TV propaganda, because it's the most attention grasping kind of fundamental front end. I think the wars are being fought covertly and guerrilla right now, and at least the majority of it, and kinetic weapons have basically no standing here, because it's just there'd be no end game to that one. I think generally people recognize that. So anyways, nonetheless, I don't think they're connected, but let's see. Oh yeah, what it does mean though is that we're going to find a bull soon here, right? Remembering that in the fear and greed aspect of things, Actually, let's go there. Definitely not. Quite often stupider, I'm sure. That's how many fun things happen, though. It wasn't a smart idea to give away all my stuff and hitchhike to Central America, but it was awesome. But definitely was not smart. So smart is not the right word. Actually, this is pretty good. We're only at a fear score of 72 with this big of a price drop. Yeah, we're not low enough yet. We're definitely not low enough yet. People should be more scared. They don't know why, but they should be more scared. We are in World War III, damn it. Just not like most people think. So we could be more scared. Volatility is super high. I think that, that move down to 52 grand in Bitcoin, and then this move down. I think we're going to get a bounce again that coincides with the S&P, probably at the start of Monday, or actually, it's Saturday. The market's closed today. So the S&P 500 will not be able to react to it. And because the S&P 500 is full of kind of retail hands, they don't know that the market was already turning, nothing to do with the war. Then they're going to start selling because they're stupid and run out to buy toilet paper, and they're going to cause the market to go down even further. So actually, I don't think we're going to get a bounce here at all. I think we're just going to go straight down for the S&P 500 on open Monday. I think it's going to push Bitcoin, and everything else is going to go down further. And then we're going to get a little bit of reprieve. P stocks, maybe we'll get another chunk of downside. I don't think if we go to the daily, we could come back down as low as 468 for the S&P 500, and then drag that out in kind of a downward spiral up until the election. Oh, see, nothing's good. People want to riot. The dollar's breaking, but in a good way. They're always good at spinning their psychological story. So it'll be spun as a good thing. Oh, we need to print another $2 trillion for insert sophomoric fucking morality slogan here. So I think, further downside for the S&P 500 could be as low as 468. For Bitcoin, that looks like around 52 grand. For Solana, that return to 100 grand looks like it's happening sooner than later. But again, notice how beautiful the run up was. Let's just bask in how fucking awesome this accumulation channel was right into the SOS. And then how much we got to learn at the break of this. And this is why understanding these trading ranges is so important. Because when it goes like this, at the spring here is when all the fun kind of starts. That's why you don't want to enter a position before the spring, specifically. You want to wait, because the spring can turn into this. And we've talked about this a few times, how at phase C here, the reaccumulation range can turn into distribution. So here we have a perfect reaccumulation range that took place in Solana. It was able to print 107% growth with only, get this, only 18% volatility spread after the creek was jumped. 16%. Right? That's amazing. That's such a high confidence probability trade or position of timing in the market. And then this last bit here, the closing out. This became obvious with the final up thrust and then the emotional trend shift in the weeks to follow. So we got it right. Sadly, I had a bunch of 20x short positions that were open, but they got wicked out because I opened them on Fetch, and Fetch just had some wildly volatile wicks on the last part of this downswing right here, where we wicked like, I thought we were a little bit closer to the end. So some of my insurance got wiped out because I didn't want insurance to the downside. So I think maybe next time I try that one, I'll aim at using 10x, because the 10x could have easily buffered it. I look back retrospectively now here. Actually, no, even the 10x wouldn't have buffered it very well. So I think it's difficult though. You can't get options on something like Fetch. So that's the downside. And 20x is so easy to get wicked out of. Same with 10x. But yeah, the short side did open, got wicked out right before we went down dramatically. So it was close on that one, but close does not equal profits. So boop, boop. But nonetheless, this volatility to the downside in some of our favorite assets just means be patient and wait for the next trading range. Don't try to catch knives and trade to the volatile upside. I mean, some people like to, but ultimately we're going to get given a beautiful gift here, and Bitcoin's going to give us a new trading range. Okay. Don't estimate its bottom now, though, to begin with, because it could come all the way down to 37,000. Like, don't fuck around and think Bitcoin couldn't come all the way down to $37,000. Like, this is a huge marketplace. Okay. It likes to move. It's what it wants. And if it can't move more to the upside, it's going to move more to the downside, because that just means more profits for the people who are playing. So keep that in mind. But 52 is our target. And then we get reaccumulation. And then we shoot up to like 120, and then back down to 90, and then up to 140, and then back down to 80. And we actually make a larger reaccumulation range here again in the future. And we start to lose more and more volatility to the upside for Bitcoin. And it starts to become like a stable fucking coin. And Bitcoin slowly becomes a stable coin over time, basically. Bitcoin will become a stable coin. Does that make sense? Okay, let's see. So no Hong Kong ETF. Yeah, there'll be a Hong Kong ETF, but that won't change anything in the market structure. War is not bearish. If you remember the quote, "Buy when there's blood in the streets," is specifically a Rothschild's talking about when war first hits, it's bearish. The first instant, that moment is bearish, because people are stupid. I'm not smarter than people. I mean, I'm just more interested in things that happen to pay off in that particular moment of chaos. So my astute senses are the psychopathic version, which is that when bad things happen, when chaos ensues, the market is reactionary. Now, at the moment of retail reactionary, you have downside market movement. But smart retail reactionary is sociopathic. It says, buy when there's blood in the streets. So you have two converging idea sets that are almost philosophically different from one another. One says, oh my God, the world is ending. I have to sell all my assets so that I have cash. And other people go, the world is ending. I got to trade all this shitty cash for assets. That's a very difficult part of your mind to kind of train, I think. Yeah, so there will be some period for downtime, but that will ultimately be bullish, because it means they're going to print more money. And yeah, maybe not lower rates, but at least create more capital. They just seem to be able to do that for themselves anyways, because they don't seem to care about debt payments at all. Yeah. Okay, let's see. Is there anything else fun on the street we can watch? I mean, I'm sure everyone would love for me to talk about the war and how that's going to affect oil prices, and none of that matters. Well, oil prices matter. Oil prices are probably one of the very few things that actually matter. or gas, I guess just you could call it energy. Oh, Iris is going to help host today's show as well, I think. Iris, do you want to help host today's show? Why not? You have all these thoughts on geopolitical events and... Okay, well, Iris is not convinced. She wants to... What do you want? Do you want to help with the beverages then? No, come here. Come take over. I'll Iris is going to host today's show by request of Robert. Let's see. Do I have another camera too? Oh yeah, we do. Great. Oh, there's more than one. Okay, cool. So that would work. let's see. There's something else I wanted to look at. What was it? Oh, yeah. I wanted to go over. Okay, so this is current interest rate scenarios. This is trillions of dollars that the governments are in debt and basically bankrupt, except they can print the money. So where does that bring us? We talked about this one the other day. Balaji shared this. The net increase of U.S. bills, notes, and bonds is equal to that of the COVID pandemic. They're probably going to do this again, and I think someone got it right there. Is that this is the real game right here? They're going to do this again. They needed a reason to do it. Hey, so more war, cool. More kinetic propaganda TV shows for people, because that's most of the only ones they recognize at this particular moment. So let's take a look at the charts. Where did I want to go? What else is out there? Oh yeah, let's take a look back at Solana for a second. Again, I wanted to finish this kind of rant about the beauty of the trading range that brought us up this high. The return to the top of the range. We're going to get some type of bounce. We're not going to be able to reclaim, and we're going to come lower, somewhere between $90 to $100. And then what we could see here is a small range that is range bound between, let's say, 110 and 90. And one or two things going to happen here too. We're either going to get market upside, we're going to close, or we're going to get market downside. We could go lower further still. Don't underestimate capital movement. It doesn't give a shit. It seriously is it's a wild beast to watch. And I don't think the ETFs are always positive for Bitcoin's price. Not that price should really matter in terms of why you value Bitcoin as an asset in your portfolio, I think, but ultimately most people are in crypto because they want to make money. They're not here because they understand the value or the importance of that technology for the human species per se. And this is just a different ethos. So if they're in profit, they're going to sell, and that kind of proved to be perfectly true and valid. So yeah, further downside for Bitcoin, further downside for everything. Bitcoin's the last that will turn over. Everything else turning over is just the warning for what Bitcoin's going to do. I think a lot of people are going to use it as an argument for the next few days. See, Bitcoin's the best place to save your money. It's safe. It could even bounce up a little bit higher than everything else, and then it's going to come back down to 52 grand. And maybe lower. Could come all the way as low as 36,000. I don't think that's what's going to happen, but just be aware, once the downside like this starts after 6 months of upside, don't try to pick the downside until you know where the trading range is. Once the trading range forms and it does something like this, great, you know the answer. You don't have to try to guess it. So don't try to guess it right now. Just be patient. It's going to show us exactly what it wants to do. And it could be a variation of things. But it's going to be a small little reaccumulation box. Or it might come into a distribution box into reaccumulation before going up higher. But again, it doesn't feel like that. 52 feels nice. Up to 100 feels nice. Back down to 90, 80 feels nice. 110, again, maybe 160, and then bull market's over. Just like that. And they found a reason to print a bunch of money for some reason. Oh yeah, this is funny. There's someone. Clearly people someone who doesn't follow me. Jonathan says, typical crypto YouTuber. Price goes up, says, I'm the one that told you this was going to happen. Price goes down, says, I'm the one that told you it's going to happen. Well, the upside we got right. We were right there. October turned up October 7th, pretty much. We said go long, stay long. And then we were bullish right up until the last part of phase B, and then that's when the trend shifted, and that's when you just need to adjust your data very rapidly. There's no other way to do it effectively. You can't be, otherwise you're going to miss it, because it's not a long sequence of events. It's go long here in October. You can watch. I started coming online. I started doing live videos all the time, making posts and videos. Said go long here, stay long here. And then yesterday the S&P 5 broke down and said, oh, we're fucked. Markets are probably going to come down lower. Bitcoin's going to go as low as 52 grand, and it's going to drop everything up pretty much to exactly where I said. So I didn't change my sentiment there at all. In fact, I changed my sentiment almost exactly when I needed to. So protected a bunch of the downside. Should have sold more of the avalanche, I guess, at the spot prices, but I was in spot to hold for the long term anyways. So on the next leg up, it's basically sell everything. So keep that in mind. We're down for a little bit. The next leg up is sell everything, the sell everything leg. So very helpful. Yeah, awesome. Yeah, some will be able to use the data and understand how this works. It's actually pretty easy, I think, once you grasp it. It's you just have to have like a different hat. Because we did this. The same thing happened for the pandemic in March 2020. I think that was the most visceral kind of learning experience for how this stuff works. Is, for instance, this Jonathanos person who's in the chat right now says, oh, did you also predict the sunrise? This is a layman's mentality about data. This is someone who just, because, yeah, we can predict not that the sun is going to rise, but the earth is going to spin. This is someone who thinks the sun rises. Okay, that's stupid. Sun doesn't rise. The earth is spinning, making it appear as though the sun is coming back into view because the earth is fucking spinning, right? So the difference here again is that markets are not technical. Market is just supply and demand. Supply and demand comes from people. So people that are scared and or greedy make the market. That's why there's these fear and greed indexes. They sound like super simple. You're like, oh, just how scared. But you have to take into account what that actually means. So the visceral experience of the world being locked down on March 11th and the price is coming down. Well, we saw that coming beforehand. We told everybody, hey, this looks like something that's escaped out of a laboratory. We were short Bitcoin for the drop into the beginning of the pandemic because nobody else was paying attention. I was the only person walking around in a mask in February when it was the only intelligent time to wear a mask, because at that point it looked like it came out of a lab. So again, the point here is that later on, as data came fruition next, we bounced up, had beautiful reaccumulation ranges, and we said, go long, stay long, everything. And that's when I learned what buy and there's blood in the streets mean. And the opposite of that too is when, oh, now there's no more mask restriction. There's no more masks. The restrictions from the airplanes are dropping. Countries are getting rid of their vaccine mandates. That was the top of the S&P 500 with that month. That month, when the federal mask mandates were striked off of airplanes, that was the top of the market. So the bottom of the market, the pandemic's beginning, people are rushing around buying toilet paper. While people are buying toilet paper, you should be buying as much Bitcoin as humanly possible. And then when the mask mandates get lifted from the unknown biological weapons, psychological warfare program they've been running in the background for a little while starts to come to fruition, and they start to drop a lot of the mandates, then that was the ultimate time to sell. So fear and greed, you don't need charts for. Human emotion is the thing that controls the market. So it's not a sane or logical thing. Okay, so whatever, you think the sun rises. The sun's not really moving that way. That's not how it works. That's not how the solar system works, my friends. Okay, let's take a look here. Oh yeah, and the only reason I told you this Bitcoin drop was coming was just because it makes a good YouTube title. It's not because I'm actually that arrogant to say that to you. I'm not saying that to you. I'm just saying that because it makes a good good YouTube thumbnail. Maybe you clicked on it because you're like, this arrogant motherfucker thinks he can tell me that the sun is going to appear on the horizon because the world is spinning as we speed behind it on the sun flying through a galaxy, basically away, I guess, away from a black hole or towards it. I don't remember which one it is there. You could probably give me a lesson if you know enough. Jay Ray says, thank you for the video. Just subscribe to your channel. Well, thanks for subscribing. I appreciate that. I'm going to read some of the comments here, I guess, for a second. Van Viddle says, been watching your chat since 2019. One of my favorites, grounded and consistent approach. Thank you. This has led to a lot of my success in this space. Thank you, Tia. Oh, fantastic. Yeah, the whole point was to try to provide as much data about my learning experience, because I always thought from the very get-go, if you look back at my channel, I was like, oh, blockchain is like consciousness. But no, all motherfucking things are connected to consciousness. And what I found interesting here is that this is a technical view of consciousness. When you're looking at charts on a screen, you're not just charting the buying and selling. That's what the layman thinks. The layman thinks you're just charting buying and selling, but you are charting the emotional waves of the human species mostly in the United States, I guess. This is the emotional wave of the human species based off the US people for the most part, because this is the S&P 500 I'm sharing at the moment. And right now, the emotional species of the S&P 500 is turned over, and it's going to go negative for a bit, and we're going to see downside. And there's going to be wars and rumors of war, and it'll bring us lower. And there'll be some peak fear moment that happens that no one could have foreseen. They'll call it a black swan. And then we'll go up and we'll form a trading range, and we'll continue onwards for this bull market, because they're going to do the same thing. They're going to print more fucking capital because there's nothing else that they can do here. It's the only option that they have. Long-term, extraordinarily bullish about Bitcoin, because governments are going to keep doing the same criminal things. If you can keep yourself and your family safe throughout that process, maybe it involves foreign passports, offshore banks, residency in different countries. I also encourage that type of thinking. We are in for one heck of a show over the next decade, because the markets going up are not a signal of a healthy market anymore. It's a signal of a dying dollar, and dying dollars across the board may ultimately be enjoyable. If you do own some of these other assets, it's going to cause for extreme unrest and confusion in the decade to come. So prices going up are going to be followed in the next few years by things getting real weird out there. And I think it's also going to lead to one of the greatest technological runs we've seen in a long time. So it's actually going to be a lot of fun. Yeah, I suspect that it's going to be wildly entertaining as well, because chaos, once you kind of get your mind around the idea that, hey, if there's videos of people randomly dying on the streets from China at the beginning of a so-called whatever you think is happening, that's actually the time to buy as many assets as you can. Not right at that moment, but after the general consensus is that everything's fucked, that's the moment to buy. When everybody is as scared as humanly possible, you buy assets. And this is how you chart markets. And that's why you were able to predict the earth turning, okay? Because it's showing us, the market's showing us human sentiment from a large scale percentage, or from a large scale, a kind of money flux. Yeah, I know it doesn't sound scientific, but it works quite well. So not a ton of room for downside though. Again, I think this is ultimately bullish. I think they print more money and we go up higher. This could even just end up being only a slight drop. But yeah, let's aim at 52 grand first. And if we can't hold that, then lower. But if we hold here, then we get that nice large trading range right at the back end for the finality of the Bitcoin bull market. Get rid of all the leverage traders, get rid of the Pepe longs, get rid of the whatever else is in this system that doesn't want to be there. Scare us one more time with something crazy, and then off we go. Anyways, that's my thought on the market cycle as it is today. Hopefully that was helpful for y'all. Oh, y'all are so sweet. Love reading the comments. Anyways, downside is more opportunity. Just be patient for that opportunity to give us a nice trading range, because you can make a higher confidence position once you witness that. So don't rush it. You're gonna get at least like a 2-week window to know. It'll be short though. This move between the bottom of the reaccumulation here, and the next to the move to the upside is going to be short. And we've got like 30 to 60 days before it goes down, accumulates, and goes back up. So it's going to be short, 60 at the most 90. So don't fret. Doesn't take too long either. Let's say 45 days on either side.